Okay, and we're live. Hi, everybody. Thank you for joining us today. I'm here with Ken, as usual. And today we're going to talk about portfolio diversification. How are you doing today, Ken?
I'm doing great. It's a
Awesome.
pleasure to be here and discuss such an important topic with you.
Absolutely. And today we're going to delve into the importance of portfolio diversification, as I just said, and how it plays a vital role in mitigating risk as part of a proactive and holistic retirement plan. So, Ken, let's start with the basics. Could you explain what portfolio diversification means in the context of retirement planning?
Yeah, certainly, Alex. Portfolio diversification is really a strategy that involves spreading investments across various asset classes to reduce the risk. In the context of retirement planning, it's all about creating a well balanced investment mix, which would include stocks and bonds, real estate, and also alternative investments. So, all managed under a central approach. And diversification allows the retirees, though, to reduce the impact of any one single investment's performance on the overall portfolio. So,
Mm-hmm.
as the old saying goes, don't put all your eggs in one basket. And
Yes, heard
so
that one before.
diversification, yeah, and that's a fun way to look at diversification because it allows us to spread the investments really across various asset classes. And again, what that does is reduce the risk of relying too heavily on any one investment, which you could potentially lose lots.
Mm-hmm.
Now, that doesn't mean that your financial advisor is a basket and you should have multiple financial advisors all over the place. In fact, it means just the opposite. Your advisor should be the one who grants you the access to all these different baskets. So the advisor will help you allocate your eggs appropriately into all the different baskets or financial strategies
Mm-hmm.
that may be needed to spread your wealth and protect you bestly. Now, to continue on a little bit with
Yeah.
that, though, when you look at the total portfolio and you consider all assets, what we do is we gain a holistic view of our client's financial situation. This allows us, or typical financial advisors, to develop really a comprehensive plan that takes into account all aspects of the financial life, including retirement goals, of course, risk tolerance, and liquidity needs.
Hmm.
So, by considering the entire portfolio, we can ensure that each investment and the financial decision aligns with the investment objectives of each client. On the other hand, a transactional approach, just kind of buying and selling of
Yeah.
investing, is only a portion of the portfolio at a time and may lead to kind of a fragmented decision making and really lack of coordination among the investments. So, by taking a holistic view, it allows us to optimize the portfolio's diversification, minimize risk, and provide a more integrated and effective financial plan for our clients.
That sounds like a really smart approach. How does diversification contribute to the safety of principal and wealth preservation for retirees?
Yeah, that's a great question, Alex.
Yeah,
And that's one of the keys.
that's pretty timely.
Um, you know, the idea of protecting that nest egg. So, diversification really
Yeah.
is the key to safeguarding one's wealth because it helps mitigate the risk and mitigate the risk of significant losses in any single investment. For example, if a client's portfolio is heavily concentrated in a specific sector or asset class and that sector experiences a downturn, their entire nest egg could be jeopardized. However, by
Oh.
diversifying across different multiple investments and asset classes, the retiree can spread out their risk and potentially minimize the impact of any individual investment's poor performance. So
Hmm.
we all know that the stock market is volatile these days.
Yes.
So I intend to specialize in the diversification through many avenues, but specifically through alternative investments.
Uh-huh.
So let me talk a little bit about alternative investments
Yes,
because
please
they
do.
can play a significant role for a high net worth individual. So when they're compared to traditional stock market investments, the
Mm-hmm.
alternative investment very often is in a private investment. And the traditional stocks are publicly traded, and that's where that volatility exists. So
Yeah.
while the stock market offers potential returns that could be high, alternative investments can provide additional benefits such as diversification, risk mitigation, and really a potential for higher returns themselves. So I can continue on a bit more about the alternative investments
Yeah.
as an alternative to the publicly traded markets. Generally speaking, alternative investments include asset classes like private equity or venture capital, hedge funds, but really real estate is popular as well, along with commodities and more. So these investments can lower the correlation to the traded stock market, which can be helpful during volatility, which means they can perform differently and provide diversification benefits. So
Hmm.
by including alternative investments in portfolio, high net worth people can reduce their exposure to the traded volatile market and enhance risk adjusted returns. And so
I'm sorry. No,
really
I was trying to take in everything you just said. That was a lot of information, but
that is
it makes a lot of sense.
an
Yeah.
amazing amount of information. But really, what
Yes.
we're talking about there is how can I mitigate that volatile market? That's the
Yeah.
part that is this disconcerting because we don't know. I mean, we're
Yeah.
happy when the market's up and not so happy when the
Yeah. Of
market's
course.
down, and a mix of alternatives can help with that.
Yeah.
However, what is really also important about an alternative is you typically need a longer term investment horizon. And that's what really allows individuals to take advantage of what we call an illiquidity premium and the unique opportunities that they might not have available in the public
Yeah.
markets. So, as an example, investing in private equity or private venture can offer access to early stage companies with
Oh, that's
significant
really
growth
interesting.
potential. Sometimes they call that like a moonshot. So that's
Yes.
one
Heard
of
that.
those ways that you can build that in, looking for, especially if you have a longer horizon and you can give that money time to work. Now, it could have some tax advantages as well,
Yep.
especially in real estate where depreciation may be part of that equation, and the ability to offset gains or losses in certain other investment structures. Okay, now,
Yeah.
however, it is important that when we think about alternative investments, it also comes with their own set of risks and complexities. So it's important that we talk to an advisor that
Yes.
specializes in alternative investments and that due diligence and careful selections go through a process to determine whether or not those investments are in our best interest. It's crucial to mitigate the risks when you're trying to maximize these kinds of returns. So, in summary, really, alternative investments offer high net worth individuals the
Hmm.
potential for diversification, risk management, but give also unique investment opportunities and potential tax advantages that may not be readily available in the stock market themselves. So, by
Yeah.
incorporating alternative investments into their portfolios, individuals can create a more robust and well rounded investment strategy.
Ken, that was all great information. Thank you so much for that.
Mhm.
And it made a lot of sense. So now that we talk about that, can we talk about holistic retirement planning and what are some of the strategies and products that can be included in the diversification process there?
Yeah, that's again another excellent question. This term
Yeah.
holistic, what does it really mean when we're
Yes.
talking about holistic planning? And so it really goes beyond just investment diversification.
Hmm.
It involves considering other aspects of our financial life, such as estate planning, as an
Yeah.
example. So, incorporating estate planning principles like long term care insurance and life insurance is part of an overall diversification strategy, and it can
Hmm.
provide really another layer of protection. Long term care insurance helps cover potential costs associated with healthcare, assisted care facilities in retirement. And while life insurance can provide a financial safety net for our loved ones and address estate planning needs.
That's an interesting perspective, Ken. So the idea is to use various strategies and products under central management to ensure a well-rounded and comprehensive retirement plan. How does a financial advisor like yourself help clients navigate that complex process?
Well, Absolutely.
Yeah.
A- as a financial advisor, I think the advisor and myself, we play crucial roles in helping clients navigate the complexities of
Hmm.
retirement planning. And there are several ways to look at it. I mean, we just talked about risk management. We've talked about
Yeah.
investment strategies. We talked about estate planning. Then we bring up long-term care and a strategy for that that may include long-term care insurance and
Hmm.
many kinds of things. So there are so many things that we want to fit together and determine if they're in the best interest of the client. And really, it takes a level of experience and wisdom and expertise to help clients and answer the questions that help them to understand
Yeah.
how to accomplish their goals, how to diversify and create some sense of a moderate to their portfolio, the whole tolerance idea of their financial situation. So, what we do is we just analyze these factors and develop
Hmm.
tailored diversification strategies, align those with the client's objectives, and guide the client through the selection of suitable investments.
Hmm.
That is part of helping them manage the risk and regularly review that and then make those adjustments because over time there'll be some there'll be some wiggle there. There'll be some
Yeah.
variation to what's going on. These economies are changing. We have the ups and downs. So we
Hmm.
also work within a network of professionals. And in each field, there are going to be levels of expertise. And so when we think about advanced tax planning, that may require a national expert, someone who has a very broad understanding of various ways to create tax strategies, whether it be
Hmm.
for a business owner in some cases or our retirees. And so, again, different set of skill set there. Same thing in the estate planning side.
Yeah.
So, what we do is we take a look at these professionals and help match their expertise with the needs of our clients.
Yeah, it's definitely clear that your role as a financial advisor is invaluable in this process. Before we wrap up, Ken, do you have any other final advice for our listeners who are approaching retirement and want to ensure their financial well being?
Yeah, there's a lot going on out there. I know there's a lot of
Yeah.
uncertainty, anything
Hmm.
from are we going to digital currencies? Is China going to be the dominant currency on earth in our future? Are we going to keep printing money like crazy and have high inflation? Are interest rates going
Hmm.
up or down? And so I guess my advice really is to start the planning process for sure as early as possible and engage with someone, a financial advisor who's qualified and specializes in retirement planning. And that's just something I've done for 26 years now. So it kind of comes more as a natural for me
Yeah.
to be able to talk to people about the income strategies and how certain they are, whether there's
Hmm.
pensions there or how to take Social Security, whether to pull money out of a qualified plan, whether we should be converting money to Roth IRAs to save taxes in the future. And
Hmm.
all of those are more than a conversation. They really require an understanding of what the path looks like, what the road looks like, that roadmap to retirement. What does it look like? And then, of course, as we go through all those principles and put those plans in place, regularly review and adjust the plan because things will change. That's a certainty.
Oh, yeah, absolutely, Ken. And, speaking of regularly reviewing and adjusting the plan, it reminds me of a famous line from the iconic TV show Friends. Remember when Ross had a self invented system to help him deal with his messy divorce? He said, I'm fine. I'm completely fine. I'll be fine. Really, I will. I'll be fine. I'm going to be fine, 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 fine.
Yes. Oh,
That's
yeah.
such
I
a great
know.
show.
It is hilarious, and
Yeah.
and it all, but fine, 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 fine.
Yeah.
And so, just like with Ross, sometimes we might think things are fine, but it's really critical
Hmm.
to regularly review the plans and make adjustments along the way. Life circumstances change, and it's important to ensure that the financial strategies remain aligned with what your goals are, no matter how fine you think you are.
Yeah. Yeah. Um, Absolutely. We don't want our listeners to end up like Ken or like Ross repeating fine over and over.
Yeah.
Like Ken, we want them to end up like Ken. We don't want them to end up like Ross repeating fine.
Yeah, I don't want to be a Ross.
No, I don't either.
Yeah.
Oh, well
Yeah,
said.
no,
Well, thank you so
that
much for joining us today and sharing your expertise. It's been a pleasure having you on the show.
yeah, absolutely. Things don't need to be as complicated as Ross's relationship, and with the
Yeah.
right guidance and proactive approach. And I use
Hmm.
that word really to help people understand to look forward and, yeah, be proactive with that. Take action rather than looking back and see what happened and try to make adjustments. Look forward and try to seek out that plan so that you can have a solid roadmap to retirement.
Yes. Well, thank you so much, Ken. It was a pleasure, as always, speaking with you today. You've taught me a lot. I'm definitely going to research some of this stuff when we're done with this call. So thank you. Or maybe we can chat afterwards, actually.
Yeah, yeah, absolutely. It was a pleasure being on here. I hope it was helpful to your listeners. And again, everyone, have a great day.
Yep. Everyone have a good day. And if you're watching this video, please make sure to like, comment, and share. And you know who to call if you have any questions about your portfolio diversification. So again, Ken, thank you.
You're welcome.
Have a great day, everybody. Bye.
Bye bye.